Hi, everyone. Hope you can hear me. Good afternoon. I'm Babak Abbaszadeh, CEO of Toronto Centre. It's a pleasure to welcome you to Harnessing AI for Resilient Financial Systems, Implications for Financial Supervisors. Just to set the context for you, I prepared a 45-minute talk with a PowerPoint before. No, I'm just joking. We're delighted to organize this event once again. We had such a strong interest at the annual meetings that we decided to bring it back in a 2.0 version, if you will. The rapid evolution of AI is redefining a landscape of financial supervision. AI holds tremendous potential to enhance risk management, operational efficiency, and financial inclusion. Yet, it also raises serious questions around transparency, accountability, ethical governance. That's why this session focuses on practical approaches for integrating AI into supervisory frameworks while maintaining financial stability and public trust. We're honored to bring you an exceptional panel. I've heard all of them speak. I can vouch for every one of them. Governor Lesetja Kganyago is the governor of South Africa Reserve Bank, and I've met him on a couple of occasions. Andrea Meckler is a Deputy General Manager, Bank for International Settlements. And of course, Dr. Stefan Ingves, Chair of the Toronto Centre's Board of Directors, two-time former Governor of the Central Bank of Sweden, as well as the two-time former Chair of the Basel Committee. And this session is being moderated by a board member of Toronto Centre who happens to also be working at the IMF. So at this point, without further ado, so that you can hear from them, I'm going to pass it in a second to Jennifer. But before I do that, I'd like to thank the Government of Canada, Government of Sweden, and the IMF for their strong support of Toronto Centre. Thank you.
Thanks, Babak. Thank you to the Toronto Centre for holding this forum. We always rely on the Toronto Centre to spice up the week a little bit and make us think about things that are a little bit maybe out there, more interesting, and nothing is more out there right now than AI, which is what everybody talks about all the time. What I loved about the October seminar that we did, same format, was how practical it was and how concrete it was, because people talk about AI, and it was a lot of, here's what's being done, and I appreciated that. So the bar is high for you guys to bring some bigger thoughts. Our idea here is to go bigger, as Babak said, and get out of just supervision and think about financial stability, resilience, all of the things that AI may be impacting, both on the side of central bank operations and also on the side of the industry and how that's coming together. We had some colleagues of mine have put together a tool on central bank communications, analyzing it using AI, and they did the thing this week. It was so interesting just because of the huge amount of data that the tool can use. So, I mean, for me, this is like a very practical application, but for you guys in your big chairs, I'm very interested to hear what interests you. So we're gonna start with Stefan. Given your long history in the financial sector as a governor, the chair of the Basel Committee, senior staff at the IMF, Stefan, what do you think? What do you foresee in terms of AI influencing the financial sector, especially when we think about financial stability?
It's impossible to know in advance what's going to happen next, but I do think that AI is going to be one of many tools that supervisors and central bankers will use. And what you refer to yourself is that AI or AI systems have the capacity to sift through huge amounts of data. And that means that if you can use raw data and present it in such a way that it's easier to understand, then of course that is likely to be very, very useful. And that means that I do think it will be possible to use AI as a tool that will kind of raise potential red flags. And if you have, depending on what your banking system looks like, that can be very, very useful, because we very often talk about risk-based supervision, which means that you supervise the large banks, and some of the smaller banks you don't supervise at all because you just don't have the resources to do it. But if you have standardized data, that probably will make it easier over time to deal with. But having said that, it's important to be mindful of the fact that AI is based on what's called large language models. And of course, then you have a head start if you use the English language. But if you don't use the English language, then AI can actually produce either nonsense results or not good results at all, because you actually need to get the raw data sort of tailored to whatever the name of the country where you exist and the languages that are being spoken in that place. And this means that, and this goes way beyond supervision, that it's a public good to produce AI databases in many different languages. And if that is not the case, then you end up relying on somebody else's language, and maybe in a bad scenario, somebody else's numbers. And that's not a good place to be. I also do think that you need to be aware of, in the future, of kind of using AI as an investment advisor. And there you're going to have serious sort of legal issues about it. And who's responsible if I base my investments on AI advice and the whole thing goes wrong, and it probably will go wrong sooner or later. And that means that we aren't ready yet to really deal with AI in combination with what I call conduct issues. And this is really about consumer protection in one way or the other. In terms of financial stability and global financial stability, weren't there yet. So it's not that AI is going to produce a global financial crisis tomorrow or save us from a global financial crisis tomorrow. Others are working hard on that in the old-fashioned way. But
nobody quote that.
But still, we need to try to understand how AI grows into these systems and what that implies, and how these new tools are used, both on the supervisory side, but also, of course, in the private sector, because AI will find its way into the financial sector. That's absolutely sure, and we just need to be aware of what happens. And I recall going 30 years back in time, there were those who said that the internet is a fad. It's going to go away, and it did not. And one could also argue that maybe AI is a fad, it might go away, but maybe not. So we do have a responsibility trying to, as hard as we can, to understand what is likely to go on next.
I really like this, what it grows into concept. That's the specter that haunts supervisors everywhere. What's this going to grow into? But that's a nice way to frame it, for sure. So Andrea, thinking about that and thinking about the complexity, Stefan also mentioned the perpetual issue for central banks and regulators is resources, and how do you make them, as the sector gets more complex and more difficult, how do you use AI for resources, one potential thing. But what about the cross-border aspect of this? How do you see AI being a positive or a negative on a cross-border collaboration in our world?
No, absolutely. That's a very important point. Look, as Stefan said, I would go even further. AI is not going to go away. I think it's up to us, central bank supervisors, to harness the gains from AI. But of course, how do we make it robust? How do we make it resilient? How do we introduce it into our system so that it works for us in a really stabilizing way? So, and as you say, I think the reality is our world is highly interconnected. And it will transform the way that supervisors work, both because the financial institutions use AI and it may be used in a wide range of ways, but even in the financial markets, right? Algos are going to change the way that financial dynamics work. You need to understand it. But also, it's creating new types of risks. Because of this nationally, but it's amplified due to the cross-border nature of it. Like systemic vulnerabilities are now they could be faster, they could be different. But the interesting thing about AI is the herding behavior that is implicit to it, and I'll come to it. And it's also understanding what kind of new risk that it creates. Where I want to pick up on what you said is, how can we use it in the context of cross-border payments? Payments is ultimately data. I mean, it's transfer of money, but it is data. And so the idea is, how can supervisors use AI to detect new patterns? Of course, the difficulty behind it, so one is using AI as this analytical force, but it's also, you need adequate privacy preserving techniques, you need data governance. And I think a lot of the work is going to be on these two parts. How do you get the data and what kind of data? And on the cross-border basis, can you put together data sets to better understand how cross-border data works, for instance, in the anti-money laundering and the CFT, but also what is proper data governance? And this is where a lot of the work from central banks and supervisors are going. I'm going to give you one example. The BIS has an innovation hub, and we do a number of projects, and a number of them are really exploring AI. How can we use it? And one is Project Aurora, and it is actually about trying to understand not just cross-border data, but how can we use these new technologies to learn to identify anti-money laundering or legal transaction in that field. And what have we found? We found a couple of things that are quite, so what we've had to use is synthetic data. That's one problem, right? Whenever you create data, you never know if it's close enough to real data. But we are using synthetic data because we don't have enough data to do that. But we have found is that machine learning that can be used on a cross-border basis do outperform usual models, traditional models. So the machine learning models, with all the problems that they may have, explainability and lack of structure, can actually be a force and they do outperform the current model in trying to detect certain patterns. The other thing is, what we have found, and is very clear, is if you can merge data, cross-border data, you get much better results. But that is, it sounds pretty easy. This is not a technological issue, right? Merging data is a legal issue, is a privacy issue. But if we, as an international community, find a way, so it's not just AI to try to analyze the data, it's can we use this technology to make the data anonymous in a way that supervisors feel comfortable that they can share this. So all of this work around data is incredibly important. And is really, I believe, a very important data where many central banks and supervisors are going to work at. Let me just give you two more challenges in that field. It's very much cross-border related, is the lack of standardization. Not data generally, how we use it, and the lack of standardization in AI. Is really a big deal. There's a lot of work going on. The FSB is working on it. The OECD has AI principles. G20 has put forward guidelines. But the point is, we need greater consistency so that supervisors can use the data on a cross-border basis, so that they can, and also so that when you have AI that spits out results, you can create consistent risk assessment so you can actually interpret the results. So this is really very important. And the last thing I want to say, talking about the interconnectedness, is with AI, once you enter the world of AI, you enter one big risk, is the risk of market concentration. Because the reality is right now, there's only very few cloud providers, and there's only 2 or 3 foundational models. So I think it's more that point than the language, because I'm pretty sure AI will figure out how to translate faster than you and I speak the different languages. But the point is the foundational models on which all of the research is built, there's only 2 or 3 in the world. And with going into AI agents, there's only a couple that are done. Then they can be customized for our own needs. But the reality is that the core hardcore data, even from the ships that you know, there's only a few that produce them, a few that have created the foundational models, a few that are actually creating the cloud service around it. And I think that is something that will require a lot of international cooperation until we get somewhere
And that
stable.
that's true for the private sector as well as the public sector, isn't it? I mean, the third-party risk of this concentration in the cloud, language models providers, and things like cyber and operational risks. I mean, this is a shared set of risks between private and public sector as well. Everybody relying on AI, basically.
Absolutely. I think third-party risk is this new world that comes from all the way from the suppliers. Before many institutions would look at procurement risk, right? And procurement was everybody was shaking. But now procurement is the easy part. It's how you sell and make sure everything is done in a good way. Now the type of risk analysis that needs to be done goes, as you say, from cyber risk all the way to the model validation, and exactly how do you make sure that and what you mentioned through language, but it's how are you sure that the way the machine analyze your data is based on your patterns and not the patterns of someone else. So these are really big challenges.
So now we'll ask the guy who actually has to do it on a daily basis how that goes. The South African Reserve Bank does use AI. So maybe you can help us to understand how you juggle some of these risks, how you see it, and what you see some of the benefits, in particular in looking at systemic risk and your macroprudential oversight. Ms. Harp has a very big remit, so there's a lot of opportunity for AI.
Well, there might be opportunity. I'm not sure that I'm doing it on a daily basis. I'm trying to figure out how the thing works. Because we see we are harnessing AI for resilient financial systems, and we've got to think of it in two ways. Firstly is the use of AI by the sector that we regulate. And whether the supervisors are on top of what the issues are there. I think Andrea had identified one which had to do with the concentration of the third-party providers, whether it's model builders or cloud providers, and that becomes an issue. And secondly, is to the extent that the sector is using AI, are the supervisors on top of what the parameters are for the use of AI? What guidance do they even give if they themselves are still trying to come to grips with that? And I think that becomes the big issue. And the third issue, which now turns it back to the supervisors, is the use by supervisors themselves of AI in trying to track the risks, because that's what supervisors do, is to try and identify the risks and how to manage it. And I often hear the refrain from my team that say that, well, they are applying traditional intelligence to artificial intelligence. And explain to me what exactly this actually entails. Well, you see, you can deploy these tools, but they do not replace the judgment that you must make. And so supervisors themselves must go and make these things. And this was it was pre-AI, but would become very useful now with AI. We had a banking crisis of second-tier banks in South Africa in 2002. And one of the things was that every morning the supervisors would round up the banks and get particular returns to try and manage the crisis. And they would do that at midday, and they would do that as we close and so forth. And then we're sitting in a meeting, and a chap from the payment systems department burst into the meeting and says that, I've got to talk to you, agent. This is what it says. Something is happening. There is so much money I can pick up from the payment system. The money is moving from this bank to this bank and so forth. And the supervisors were still stuck with their form and returns, and these chaps could see this thing. And which then brings me to the issue of data, because sometimes we are thinking of this data as the data out there. And the immediate challenge for us was, how do we harness the data that we already have? And what do we learn from the data that we already have? And here came the deployment of the AI tools in trawling through the data to see whether there are patterns that are emerging that deserve the attention of supervisors. And that, in a way, what it does is that it releases supervisory resources from doing the menial work to focusing on having to do judgment and having to give guidance. And then, of course, we supervisors and supervisors, we're supposed to see all sorts of opportunities, but then our job as supervisors is not complete until we say, but what are the risks of the tool itself and what are the challenges that we face? And we find that the challenges, they run across, we find that in the private sector, and they also come into the public sector. And it then talks to the quality of the data that we use. And so setting out the data standards within our institutions and who has access to which data, for the sake of me, I got struck by how siloed we are as central banks and how particular parts of the central bank think that they own the data. This is my data. Forget, before we even get to the privacy issues, just internal. Who has access to which data becomes a big issue then. And then I talked about the quality of this data. But then there are models and there are models. There are the AI models and there are the models that we are using internally. And how interoperable are we? So we have to rediscover this or accessing what it is. I mean, I'm looking at this and they might hate the guys in business technology. But it takes a couple of days to produce a decent forecast. And one of these creatures that was brought in to try and mimic what the forecasters were doing was able to produce a forecast in a matter of seconds. And then, of course, we spent 2 weeks or 3 weeks to figure out, did it get it right or was it hallucinating? And you know, every time you think it got it wrong, the technology guy says, oh, where did it get it wrong? We are going to train it to get it right there. And that learning journey of iteration then becomes important. And then, of course, lastly is the issue of potential bias that many people would always talk about, because these things learn particular things, and whatever it had learned, it doesn't quite unlearn that fast, and it does that. And think of it. There are only so many providers, and think of the supervised sector, all of them using these things, and then they make exactly the same mistake across the regulated sector. Then it has magnified the problem. Now, of course, the challenge for supervisors is to build your own AI that oversees the AIs of these things. It becomes complex, and but let me leave it. Let me leave it there.
So both you and Andrea make a very strong case for data investment, right? Investing in the quality, investing in the. But I really like the contrast, the cross-border and the internal sharing of data. We see this everywhere. I mean, it's a bureaucratic problem, right, that you have to overcome. It's also access and making intelligent decisions about that. I also love that you still think there's a role for the old-fashioned judgment. And this is, in some sense, AI is kind of paving the way for you to think more about things and do less of the grunt work. But we'll come to you, Stefan, in a minute, but we'll start back with you, Lisecha. So thinking about barriers, thinking about emerging market contexts. One thing Stefan mentioned was language in the language models. But what are the things that help emerging market central banks tackle the challenge of AI, both in their own systems and in their markets? And what are the the barriers for them to use AI? How do we think about it from an emerging market point of view?
I don't think that there are special emerging market problems here. I think we probably face similar challenges, with the exception of one that is a problem of central banks, which has to do with having the right skills in these things, because everybody else there can go and buy these skills, and they will pay top dollar for it. And getting those skills into the central bank becomes a big challenge for us. I talked about the data availability. Well, that talked to just even internally having to do this thing. Language is, for us, at least in South Africa, it's not a problem because we speak the same language that all of you speak, right? But there is a particular version of South African English. So this is what happened. We had to deal with an issue of market manipulation. And the competition authorities had picked it up through their counterparts in here. And then they decided to launch an investigation. And one of the things then that had to do was to trawl through not just the data, but the conversation that had taken place. And in the investigation, they had brought in an external party who decided that, no, here in South Africa, there might be people who have got an interest in these things. And the thing got taken to Ireland to be decoded there in Ireland. Do you know what an indaba is? See, but it's English in South Africa.
Market,
but
no?
no, indaba actually means a big conference, right? And so
Conference.
these big language models in Ireland, which must decode these things, struggle with South African English, because then these chaps in the foreign exchange market speak their own language that we do not use. They are in the dealing rooms, and the supervisors must supervise this chap. But the language that they use is a completely different language from everyday things.
From business English.
Right, from business English. Call it market English. Whether it is in the forex market, the English used there is different from the English used in the equity market, and so forth. And so you had to send this thing out because you want the skills out there. But having those skills in the central bank is a big challenge, and equipping the supervisors with this is that. And the last point that I thought that I would just make is having to deal with efficiency gains versus risk detections and so forth. And it became a very important thing, because these things might help us to enhance and pick up the detections. And well, the chaps in IT security decided to build their own AI to go and check on what everybody else is actually doing. And this bloody thing decided that it's going to block what the others are doing because it is not secure, right? Because it has been trained in a particular way. But over time, it turns out you could actually enhance IT security using AI. And the posture that we had initially taken was that this thing is going to lead to a big cyber security issues.
So interesting. So in-house cleanup is still part of the challenge, part of the barrier, but skills, and we have this perpetual conversation around cybersecurity, which is reminiscent of that, right? Do you take supervisors and train them up, or do you take technologists and train them in supervision? AI is a bit different than that, right? You really need modelers, you really need people who understand the technology. You cannot train supervisors for this.
I'm sure you can. And the problem is that the age profile of this panel is such that it is not going to help
It's not
you.
going to be us. I think even my kids are aging out of that. All right, so Andrea, so the BIS does a lot of work on training around the world with central banks, supervisors. What can we do to help countries skill up or develop their capacity to handle AI for supervision and for financial sector oversight?
So you're right, we do quite a bit. We have training courses, webinars, but what we feel very importantly is to create these community of practices, right? Because we don't know. There's still so much to learn, right? And it's not because you're an AE, an advanced economy, an emerging market, does not mean one knows more than the other, on the contrary. So we need to learn together. And what Lisette said is very true. Skills are very scarce. So how do we really create synergies to learn together, to create the right data governance, to hopefully put data together, but just each of us understanding how do we analyze the risk? What are the risks we actually need to look at? How do you validate the models? How do we learn from each other? So creating this community of practices where technicians come together, technicians of different levels come together and exchange. And to come to your point, that's an important one. Are we just leaving it to AI people? No. Like this community of practice and AI, to come to your point, is fully embedded. AI is becoming a tool. So an important point that doesn't make it easier, but I think it's AI doesn't work without humans oversight. In fact, AI, that's what I think, we'll see in 10 years, I don't have a crystal ball, as you said, AI can only be as strong as the experts who are handling it. Why? So yeah, you're right, AI can do things in seconds that previously would take 2 or 3 days. I've seen it. I've seen AI agent, because it's quite cool, right? You can throw them an article, like an academic journal article, where they figure out what the equation is in order to forecast some kind of model on financial market yield curve. Then they can show it to you, they can graph it, they produce you the coding to graph it, they can answer the question within seconds. They do it within seconds, but it's not usable within seconds. You need to ask the right question. Well, how do you ask the right question? You need to be pretty good at understanding what is it you're looking for. And I think this is what is still underestimated. So the power of AI is more the way I think of it, kind of this underneath support. But in the end, the person who asked the question, and is that the right graph? I mean, you've all had to do graphs. You need to figure out what is it that your graph should show. What should be your different axes? It's the same with AI. And I think what we're starting to understand is what are the limitations of AI. On one hand, it's unlimited, I understand, and I'm totally advocate. But we also need to understand AI does not know what it doesn't know. It may seem pretty simple, but it is, you need to understand it. You may think it's true with us too, but we're a little bit more humble in knowing, if I'm a macroeconomist, it's pretty clear there's certain things in labor markets or in IT that I may not know, or in engineering or in climate. The computer doesn't know that. AI has been fed data, and it creates its truth based on that data. And by the way, you ask twice the same question, you might get twice an answer, just like humans. Fine. But the point is, they don't know what they don't know. And this is why you need the intuition. An AI does not know, that's why an AI is not a good, it may not know certain things that are right or wrong. There are many things the AI does not know. So the point that I'm saying is skilled people together with AI is what is going to make us strong. So the skill set, and it's not AI or experts.
It's both.
It's AI and experts. And then you're going to have all these questions, how much expertise on both sides? This is where we need a diverse team and people with it, that get together and work together. And I'm seeing that at the most forefront AI agent, they should not take decisions, by the way, because they do not know what they don't know.
So there's sort of layers to what you said, because we want to teach all of us to use the tool, and that's in itself a skill. But then you also have people developing, so you would have a sort of spectrum of skill development. But what I really took from both of you is that the skill set means you can use the tool properly, and that's actually harder than it sounds as well. So, all right, Stefan. So. Lessons from I have an extra question to ask you. So lessons from past reforms. So you were there from soup to nuts on the Basel III reforms, which is huge, huge global reform. Based on that, on how you've seen things transpire in reform processes, what do you think we can learn for improving supervisory architecture of AI and using AI? But I have a sub-question, which is, in many reforms, we're on the other side of the table from the industry, because their clear incentive is to save money on capital or liquidity or whatever. In this one, are we on the other side, though, or are we in it together? And is there a different lesson vis-a-vis the private sector when it comes to AI?
We don't know yet whether we actually, I would guess that we end up on different sides eventually.
Okay, all right.
Because the drivers in the financial sector to drive down cost is so strong. So calling it whatever you like, it's just about getting the leverage ratio down.
Right.
Because that's how you make more money. And that's not an issue of AI or not. And it's built into the system, and if you can come up with some solution where you use AI in the private sector to drive down, to increase leverage, you use AI. And then if you're on the public sector side and you dislike over-leveraged system, you use AI to make sure that it doesn't happen. And how you combine those two, hard to tell. But based on, you referred to Basel III, but it's actually a more sort of general process than that when I was thinking about this, and that is that something new happens, you try to understand, and in a good scenario, you understand that you don't understand, which is one of the problems with AI, because they don't understand it. And normally what you do then, you get a group of people in one room, and they start talking to each other, and you set up a working group, particularly if you do kind of global or international work in one way or the other. And they come up with something, whatever it is, and then you try your best to disseminate that. And then you kind of see what happens, and then you do a follow-up eventually. And from those follow-ups, and here what you do at the IMF is very important, and so is the BIS, is out of that tends to, over time, come some form of best practice, in the sense that somebody writes down something in terms of general principles, saying that if you're dealing with this particular issue, this is what you need to be mindful of. And that over time tends to produce a norm in terms of how you actually go about dealing with these things. And when you do this long enough, you very often actually end up with procedures that tend to produce a standard of some sort, and most people agree that this is kind of roughly how you think about these things, and this is how you do this. And then the IMF travels the world and tells this story over and over and over again, and sometimes it catches on, sometimes it does not, and you kind of have to be a born optimist to do this endlessly, and eventually it is sort of picked up almost everywhere in one form or the other. And then you follow up. And what this is, it's a kind of for lack of a better term or description of it, it's kind of a learning loop that you do and you do and you do it over and over again, and try to sort of be mindful of how to improve on things and what has gone wrong and what did not work in the past. And of course, I'm taking this back to the issue of AI, and Lesetja, what you referred to, if you get it wrong and the whole thing goes around and around and around, then you end up with what you could call aggregated hallucination. And that's a bad place to be. So ultimately, at the end of the day, somebody actually has to pass judgment saying, hey, this doesn't really make much sense. And that's, of course, what you also said, Andrea, that's the dilemma here, that these models, they don't have feelings and they don't pass judgment and they don't sort of scratch their heads. They do everything based on probabilities, based on raw data. And if something is wrong there, then you have a problem. And then that's why those of you who are sitting here in the audience, you will be in this business forever because judgment is not going to go away.
That's a great way to end it. Or at least that's a great way to throw it to the audience. All right, we have a few minutes for questions. I hope there are some hard ones. Lady in the front row.
Is there a microphone?
Yep.
I think that, well, first of all, I'm Dr. IG. I'm private sector, and I'm an expert on AI. We're a consulting firm advising in risk management strategies. So, while I think pretty much in between the governor of South Africa and Mr. Stefan explain what are the different problems and approaches to using synthetic data, I think that there is something very important to acknowledge in this, is that synthetic data are essentially unstructured data that is used to train AI, and then it's supposed to generate new data. The problem with that is that in structured data, unstructured data, is not. It can be anything, any image, any video, anything you want, text, languages, whatever. So you train a model with that, and then whatever you get from there is reused to train an already trained model. So you end up in a cycle, and the final result is going to be a lot of toxic data that you generate. And then the problem with that is that if you choose that for very high risk issues like healthcare, like banking, like all these important areas in which humans are involved, it can be really very dangerous. So the bottom line is that generative AI, because uses that data unstructured, because otherwise you cannot get new information. If you use structured data, you will end up in a cycle. So I think it's not yet very well resolved the issue of using generative AI, and so far the reason is that OpenAI and a lot of the companies claiming to have AI, and since there are more data, because already the internet has been scrapped from almost about everything humanity has produced, then we just keep recycling and recycling what is already there. So I think it's just a caution to think about all these issues, because the bottom line is to get an ethical AI, and an ethical AI, it will be precisely all these issues of removing racism, misinformation, and all of the problems that we have to take care of if we look into a human-centered AI. Okay. So that's just a comment. You may comment about my comment, if you would like.
Yeah, I mean, the stuff I'm aware of that works really well are closed data sets, but Andrea.
Your point is absolutely right. We shouldn't be using synthetic data. Sorry, hard thing to say. But, ideally we have perfect data. So, for instance, we have a project, and I mentioned it, and that's why I'm actually made it clear. Because you're right, you're letting machine created data to train the model. But look, you've been in data, we wish we had, data, we wish we have perfect data. It's not something we should be doing in the sense if you have alternative, but you need data. And for instance, in the anti-money laundering, we don't have enough cases. So, it's more to create data so that you can see if the model picks it up. But you're absolutely right, and I think that's why the governance of data and how can we make best use of the data available, structured and unstructured, is the biggest challenge that underlies it all.
Great. Don't be shy. Third row.
Was it on? Oh, sorry. Hello, my name is Timur Shagirmatov. I'm a Mercatus Fellow and student from George Mason University. My question is, you guys had talked a little bit about how there are not yet many differences between emerging markets and developed markets in the use of AI. We are facing similar problems. But my thought is, can we get to a point where there becomes a big inequality between the developed countries and developing countries in access to AI or use of AI? And since we are at such an early stage, is there a way we can avoid this? I think we've seen so many areas, infrastructure, medical services, financial services, where there are these disparities. But if any of the panelists had any comments about how we can avoid that and have a more equitable use of AI around the world, that would be interesting to hear.
Do you want to pick it up?
No,
Yeah, I
Stefan?
think it's a bit too early to tell, and I say this based on my involvement in many conversations over the years about, let's say, central bank digital currencies and payment systems. And the fact of the matter is, in a good number of cases, the developing countries are a lot better at it than what is called developed countries, because also called developed countries sit on old COBOL legacy systems. So if you have good people, it's not the level of income that matters. It's what you have in your head and how to use it.
I would totally agree. I think the disparities take a very different form. I think the disparities is more big tech versus the rest of the world. So that's what I meant by market concentration. It's who has access to the chips, who has access to the supercomputers. So both on the hardware and then on the software. It's much more about who has the means to create these foundational models. Right now, there's only 4 of them around. So it's not, I think from that perspective, it's much less a story of advanced economies, emerging economies, and even the skills, because what is very interesting is these online courses, online universities, and the search for, so this is something I believe, this is why I picked up on you, although, in my view, it's not the language, but the ability to search talent around the world is going to be different under AI if you have real-time translation possibilities. So I think it's less going to be on that part, but really on who has the resources. But then it's also how do we supervise the creation of these resources, and how do you harness in a way that is equitable around the world.
But one thing to be that you raised about skill shopping around the world is it's going to go to the highest bidder, and so then you'll have an uneven playing field for central banks with fewer resources, countries with fewer resources.
And we see it even now. I think a big challenge is how do we attract the talent? Because you mentioned, right? Yeah. We need the skills together. We have some experts. No, we have many, and you can, let's say, central banks and supervise, great experts. We need also the AI expert. Now, coming to a central bank may not be the first thing that some of the AI people think about. If you're an economist, going to a central bank is cool. So how do we get that to happen? I think, and central banks are not going to pay the same amount that the highest bidders, and yet this is what we have to do, is to be able to attract really bright, not necessarily young, but if they come young, we'll take them young, but bright talent to work with central banks and supervisors to do really, really cool job. And I think that's also why central banks are doing some very exciting projects to show that they are there. And it is really a very interesting area to be working at.
Central banking, exciting. But I understood the question also slightly differently, which talked about equity in access to the technology. And Andrea, you talked about some of the things that underpin this. And so I go back to the COVID pandemic. We all faced the same challenge, and it was like humanity is facing an existential challenge. And we said that we are going to develop vaccines, and we moved very fast and developed them. And as soon as the vaccine was developed, very quickly hoarded, and it was, they belong to my population. And the way I understood it is, as we race with AI, and we say that this thing require chips, and a view comes, then these chips should not be available to you or to her. Only I can have these chips. And then it goes further, it says, oh, these chips, for you to develop them, you need certain rare minerals, and then it's, oh, okay, I have them, the minerals, and you are not going to get them. That's how I sort of like understood and this brings then the next question. If this is the next big wave, how do we strive for an equitable access to this, given that this is almost a game changer for humanity? And I think that becomes an important thing, which brings me to something that my notes said the moderator has a reserve question, which has to do with cooperation. And so as central banks, what are the areas where we should be cooperating? Andrea talked about communities of practice, which we could then create, and we start to share that knowledge. And then the other, of course, we are central bankers, we supervisors, we like standards, and we are going to talk about, are there things that can be standardized here? Well, if there are things that have got to be standardized, first of all, we must figure out what this thing is before we can think about putting standards, because otherwise we are going to have the wrong standard because we have not quite figured out what this thing actually is. And the third, for me, has to do with the technologies that would make this thing work. And we have always taken a view that says that we are technology agnostic, so they must allow the various technologies to come in. And if that is what is going to happen, the interoperability of these technologies is going to become a big issue. And what do we set in the process of cooperation to do that? And lastly, of course, the building of capacity across the central bank and the supervisory community, how we go through that is going to become an important issue in terms of cooperation. And for supervisors, we will be forced to cooperate anyway, because these institutions operate in multiple jurisdictions, right? And we are going to, and of course we are going to wait and sign memoranda of understanding and all of that. The truth of the matter is that the people who are going to use these technologies for nefarious means do not need memoranda of understanding. They just cooperate.
You're the first person to mention nefarious, and I think that is actually something that's facing supervisors big time right now, is the use, fraudster use of AI, which is rampant, and something that maybe market conduct regulators are really faced with. But one thing struck me of what you said was the cooperation. We can't wait till the thing is cooked before you cooperate and share and do the collaboration, because then it's going to be cooked in a way that might not work, right, across borders. Before I go to the rest of the reserved questions, Mr. Babak.
Oh, I have to say, this is really a fantastic conversation. I usually don't ask questions at our events, but I can't resist.
Help
Yeah, my phone dropped too. Andrea talked about how you really need, I think, my words, not hers, but critical thinking and judgment as you use all these data, right? So I want to pose this question to the governor or all of you, or whoever wants to answer this. We wrote a chapter for BIS on Supervisor of the Future, and we actually talked about this critical judgment and thinking. Now, I've noticed steadily, I'm old enough to know that educational standards are watering down around the world and also becoming more and more technical. So do central banks actually have the burden now to create opportunities for their employees to develop critical judgment and thinking? Like, this is a high bar, right? It's not a simple matter. So I'm just wondering, Governor, if you have to confront this issue or anyone else has thought about it.
Well, the issue has always been the same, whether you have data or not. Good judgment and thinking has always made sense. A long, long time. Whether we are training people to have that, that's kind of a different issue, and that's a constant challenge, of course, to deal with that. But I would say, I mean, grasp the mechanics of AI and think for yourself.
But let me push Babak's question a little bit, because one thing we see when we work with countries is that everybody is very comfortable doing compliance-oriented supervision because there's no risk to them. Yeah. Check my box, check, check, check. I think AI is going to make that harder. It's going to force even more risk-based thinking, right? And I think it really does push supervisors out of their comfort zone.
Well, AI might tick those boxes very fast.
Yeah.
Faster than the supervisors would. But this issue about judgment, which is, I'd always say this thing because Stefan said that it's always the challenge anyway. Because as I would say, even where you have traditional economic modeling and forecasting, the models approximate reality. Somebody must still make the policy judgment. And that is where you end up having to focus on. And in so many instances, you can't put people in a classroom and teach them how to make a judgment. You almost have to be with the people making the decisions. And part of the big challenge that I had with remote work is that young people who are coming through, who should be with people who are making these judgments to understand how people arrive at decisions. These young people are at a serious disadvantage because they are sitting behind some device somewhere and communicating with us internally.
I would add, absolutely, and that's a very good point. I would take the question differently in the sense, I don't think this is something central banks and supervisors need to do that, more critical thinking. But not because of AI, because the world is becoming more complex. And AI just reflects that. AI is probabilistic. So it's backward looking, no matter what we want to think. I mean, it can forecast in a probabilistic way. It can forecast if the world stays the same as it was yesterday. Well, we've just experiencing. The world never stays the way it was yesterday. And whenever you come into something new, of course, we can only use what we've experienced also. Some people have experienced quite a bit, and that gives a wealth of experience. But I think, and the critical thinking is particularly important because we need to put more things together before we can no longer think in silos. In monetary policy or supervision, we need to think about all these different, we need to bring thoughts together. And so I would argue it's not just AI that forces this, it's the complexity of today's world because we're more interconnected, there's more, and technology comes on top of it, that yes, this is the time where sound intuition continues to be and should continue to be at the core of our work.
What a nice way to end it. Thank you, Andrea. All right. Thanks to our fantastic panelists for a very insightful panel. We'll look forward to seeing you at the next TC event. And check out the TC website on AI. You'll find some good stuff.